margins, it was expected that you will inch up in Q2, but now you're guiding that you will hit 8.5% while exiting Q4. What is the reason behind that?
No, I think we were consistent in our guidance, and even the last quarter call, we did mention that it is the exit of fourth quarter. It will be touching 8.5. Let us understand one thing: this transmission of the lower cost borrowing, that's happening over the period. It's not happening immediately. And also, 87% of my borrowing is in the fixed cost. Only 13% is the floating. The floating is the one which will come down over the period. The fixed one will change only when I replace it. So it happens. Normally it takes around 18 months for the total transmission. And we are confident that over the next 3 to 4 quarters, transmission will be complete.
Sir, one of the key things which the street was watching out for was the liquidity position. You still have a high liquidity position at a high cost. And you just mentioned that, you're trying to bring down the cost of funds over a period of time. By when do you think this unwinding of high cost liquidity will happen? Will it happen completely by Q4?
No, see, if you look at my numbers as on September end, our liquidity now has come down to 3 months of the liability. In the sense, earlier it was 6 months. From 6 months, it has come down to 3 months. So it has already come down. But the only thing is, it has come down in the last part of the September, that is second half of September. So it is not visible. The impact is not visible. But third and fourth quarter, it will be visible.
How do you see the CV segment, sir? We've been seeing some sluggish growth coming in the segment as a whole. From a lending point of view, how do you see that segment?
Now, if you look at the numbers have been good. If you look at the first half of this year compared to the previous year, the CV segment has grown. Especially LCV has grown by nearly 9% and heavy has grown by 6%. So that is a good indication that demand is good in the market for the commercial vehicle. And the October numbers also have come. October numbers have shown that overall LCV and heavy put together is grown by nearly 9%. So I think the market is still positive, growing, and demand is quite good.
Mm-hmm. On the MSME front, you have, put out a cautionary statement saying that there is a stress which is coming in that segment, especially with some of the companies which have exposure to the US. How do you see this segment? Do you have exposure to companies which have exports to the US, and that's why you are, sounding off for this caution?
See, we are cautious because it is an entire ecosystem of MSME. The people who are involved in manufacturing, servicing, export, there are multiple people and agencies who are involved. So if the US tariff is going to impact them, then it will impact the ecosystem. Even though our exposure is very minimal, especially some units in Tamil Nadu and in Andhra Pradesh, we have a small exposure, but our ticket size is very small. So it will not have a major impact for us. But the growth in MSME segment will be sluggish. In the sense, credit demand will be, because we will be cautious to lend them.
Is there any other segment which is looking which is facing some stress aside of the MSME?
No, we don't see any other segment, especially CV and passenger car, scooter are doing very well.
Mm-hmm. Also, sir, if you could take us through some of the other segments, like consumer lending segment. Do you see? Have you seen a pickup happening in October or end of September?
So there's a significant improvement in two-wheeler and passenger car, because passenger car, if you look at the first half of the year, sale was degrowth, showing that there's a degrowth. But in October, there is a big growth. So and also the growth is in the base models. That means there's a fresh aspiring new customers are coming in to buy new vehicles. There is a good indication that demand is good, and two-wheeler has been very good for us. Two-wheeler financing has been very good for us. I think we have hit all-time high in October in a single month. So the numbers are yet to have final numbers yet to we get, but the October is the indication that that November and December can be equally good. It may not be November, but December exit of this calendar year, demand should be very good.
What are you doing to reduce your cost of funds, sir, and what is it currently?
We are at around, there is a book cost and incremental cost. The book cost is around 8.83, but incremental borrowing cost is around 8.2. So as we are able to raise more resources, reprice now, then the cost will come down. We are hoping that further borrowing cost will come down to, incremental cost will come down to around 8, and the overall cost of the book will come down.
And how do you plan to do that, sir? Are you looking at low-cost debt, or are you looking at equity as well at some point in time?
See, market is good. One, we have reduced our deposit interest rate from the last quarter. That will have a good impact on us because the deposit is today around 28% of my total liability. The reduction in the interest rate for the deposit will have a major impact. Plus, the other, the bank borrowing also will be coming at a lower cost, including the securitization part of it. Overall, we are confident of reducing the borrowing cost.
Are you looking at raising fresh capital or equity in the near future, sir?
So we are at more than 20% CRAR now. We are not really looking for any equity infusion now.
There is a market talk about of Japanese bank looking at some equity infusion in your company. I just wanted to ask you that is that true, or is there a discussion ongoing on this?
See, any bank or NBFC will be definitely looking at various options of raising resources. And that is a continuous progress because it is the, what you call the basic raw material for a finance company or bank. So there will be some discussion going on, but I can't confirm anything now.
Sir, you're also undertaking some structural changes with respect to the governance structure. We saw the MD, stepping out, Mr. Parag becoming the MD and CEO from December. Any reason why that changed? Because that came as a little surprise. The expectation was that his tenure will be extended. Mr. Chakravarti.
Shriram has a strong senior management team, and we have a succession plan. And that is a well planned one. So it is not a surprise, and it was always there as a plan. So we have enough senior people to replace and succeed. And that's our stand.
Also give me a sense of your gold loan portfolio. There's an increase in that GS3 and GS2 level there. And you are off, as of now, you're not doing anything because the contracted price is much lower than the current market price. But how do you see this entire situation evolving?
See, when the LTV is very low, in the sense, if my asset value goes up and if there is no immediate challenges, we do give some time to the customer. It is always, we don't want to make the customer lose his assets. So we do give some time. So that's the only reason. We have been always like that as a company, being more, I should say, empathetic to the customer's challenges. And we are in touch with customer, and we don't see credit cost going up. What's more important is credit cost, not the GS3 or GS2.